Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy here, and it is Wednesday, 8:30 a.m. EST. Retail sales data just came out. We're going to jump on some other charts to take a close look at how that data has affected the charts. Before we do that, go ahead and get your free algo. There it is right there on the screen. Get it. Go to the description, go in there, click, and get the free algo. You'll put in your email address. The next screen will be the algo. So sideways market, going to be quiet, I think, up until a certain time. What time is that? That time is probably going to be later today. Let's go ahead and take a look, first of all, at what is coming today, because Chairman Powell, the Chowl, is going to speak today, and that really could move markets later. So on the calendar, we have right now 6:30 a.m. Retail sales data came out higher than expected. That should be strong dollar weak markets data, but it doesn't seem too extreme. One tick up on both core and retail sales, right? So just slightly better than expected. Technically, that should be dollar strong, meaning that things should go down against the dollar, but I'm not seeing that right now on the market. So we'll look at the charts in a second. We got the Canadian data coming out here. The big morning for Canada. So after 9:45 a.m. EST, their monetary policy report, rate statement, and overnight rate, that's all coming out. That's like their version of the FOMC. So it could be a lot of volatility. After that, at 10:30 a.m. EST, you have their press conference. So once their press conference is done, and even right after their announcement, there's going to be volatility. So if you're looking for trades, and I personally don't trade the news until at least several minutes after it's been let out, because everything just kind of moves around in an unpredictable fashion. But once that's kind of been digested, then I might be interested in trying to get some of the volatility trades on the Canadian dollar. We also have Fed Chair Powell at 1:30 p.m. EST. So that's pretty late in the day. It's halfway through the day, really. So when he speaks, what happens, right? He's speaking at a conference of some kind. It's Economic Club of Chicago. I don't know how important that is, but it doesn't really matter. When Powell speaks, everybody listens and they dissect everything he says. So if he says anything that indicates, oh, we're going to cut sooner than we thought, or any slight hint at either hawkishness, dovishness, or anything like that, the market could really go wild. So I would be very careful trading today. In fact, today I might not even trade, or if I did, it would be like scalps until after that happens. Now, later you have some New Zealand dollar data, the Kiwi, for their CPI quarter over quarter. That might be a big deal over there if you trade the Kiwi. And then 9:30 p.m. EST is Australia's employment data. So kind of a busy day across the whole day, mostly for non-US news. Well, no, that's not true. Huge U.S. news. So just be careful out there. Be careful trading. So what does it look like in the charts? Well, look, it depends what Chairman Powell says, right? If Powell is, saying things that are either way hawkish or bullish, then what we're seeing in the charts might finally end. And it's been going sideways for like a month, more than a month. This is for Bitcoin, by the way. So, Bitcoin's been sideways. We did have that test of the bottom here, and the market stabilized after Trump went ahead and said, hey, we're going to roll back most of the tariffs. That's the nature of trading in a Trump administration. Just get that unpredictability of when he might put on a tough policy and then just take it right back off. We love it in the trading world because it gives us volatility. So this I predicted for Solana just based on what the charts and the algos in Solana said the other day. Not exactly following it, but we'll see. It does seem that with the announcement about NVIDIA last night, there's some kind of some restrictions put on NVIDIA selling certain chips to China, and it could cost them billions. Well, that did knock down the tech market. Knocked down NASDAQ last night, which knocks down crypto when NASDAQ goes down. So this entire prediction might be different. And this is what we talked about on the Sunday video. We talk about quite often in the era of major news affecting markets. The markets are not that predictable over higher time frames, right? It maybe you can predict what's going to happen in 15 minutes or 30 minutes or a day, but trying to find out what's going to happen a week later, not so much. This is why my predictions lately have only gone out a few days, and even then come with some pretty strongly worded disclaimers like, hey, the world's crazy, this can change. But last night we did see a bit of a gap down here in the NASDAQ, and I'm pretty sure this had to do with the NVIDIA thing. So I'm going to jump down to the 30-minute chart. Market's not really reacting very much to the news right now, just super, super quiet and flat, probably waiting for Powell. But last night at really yesterday afternoon at 4:30 p.m. EST, the NASDAQ dropped down. I'm almost positive that had to do with the NVIDIA news, right? NVIDIA can't sell certain chips to China, and it's going to cost them billions of dollars. And so the tech stocks kind of took a dump. And of course, you'll see a mirrored gap in the other markets, because what happens with markets when there's a lot of leverage, when there's a lot of people borrowing money to trade, that's what leverage is. It's a short-term loan or not. It could also be done through options, and it's using a small amount of money to control a large amount of shares. That's what leverage really comes down to. And when there's a lot of leverage in the market, right, then you get what's called a margin call. Now, margin call means that, okay, so you've borrowed a certain amount of money, and then the stock or whatever you own goes down. And so you now own a smaller share of that position because your value has gone down, because your margin has gone down. Your margin is what you put in. So you put in, $100 and you borrowed $1,000. You have an $1,100 position, right? Let's make it easy. You put in 100, you borrowed 900. So you have $1,000 position. So if the price drops, 50%, well, you still own the entire position, but now you have a $50 stake in the position, and things have changed a bit. And so you're going to own less of the position as that happens, and you need to put more margin in, right? The lower things go, the more margin needs to be in the position. And that means that you need to cough up cash to continue to keep that position alive, or it liquidates. So why do I explain all of this? The reason I explain this, it talks about why the whole market falls, even though only NVIDIA got hit. NVIDIA is a huge piece of the market, of the NASDAQ. So when NVIDIA takes a big dump, and everybody's margins are called, they have to liquidate positions across the board, including gold, including everything else, just to cover the margins on other positions. So you have a choice at that point. You can either exit your, NASDAQ position, right? You can exit your NVIDIA position, and that's selling. That's going to push the price down, which is going to cause other people to have margin calls. Or you can cover your calls with cash, which usually you have to sell other positions to have. So when there's a lot of leverage in the market, people borrowing money to trade, any kind of a dump in a major equity or a major index is going to cause margin calls, which is going to cause more sell-offs. And this is why having a lot of leverage in the markets is a bit of the problem. And what these events do is they clear leverage out of the market, right? So a lot of positions will close, things like that. And the less leverage there is in the market, the more realistically things are priced, so on and so forth. However, there's just a ton of money to be made in selling leverage. And so you'll find that once everything clears out, more leverage is offered. And then that's what that is. Give me just a second. Okay, so that being said, that's an explanation of why a large position like NVIDIA might take a big hit and then move over to other stocks that don't have anything to do with NVIDIA. It's like, well, okay, so NVIDIA fell. Why is everything else falling? Because it's all tied together through the leverage markets. Good. Let's take a quick look at a Forex pair, and then I think that's all we're going to have time for. See, we're on a 30-minute chart. So with the euro, which is, I like trading the euro. I think what we're going to see with this is kind of a controlled move up as it stands right now. I think we're just going to see another extension like we saw, where price goes sideways for a short time and then extends upwards. So you'll see it kind of move like this and then maybe head up. It's just a bull flag. It might be the price dumps down to grab a little bit of liquidity as well. That can happen in the current environment. That's what the algos are saying. So we may see a move down. If the conditions end up lining up, I will short this and at least scalp it on the way down. But I do expect this to actually continue up. Excuse me. So that's the look on the euro, and the British pound is going to be very similar, right? Now, remember, I'm a Forex trader primarily, so this is where my bread and butter is. We'll take a brief look at USD JPY. That'll be the end of the show. Just bearish, slowly getting crushed down. So what I would look for in this scenario is some kind of a pop up to sell. That's just based on price action. The algos do back that up, though. Now, there will eventually be a strong pop up, but I don't see any evidence that it's about to happen soon. At some point, you're going to see price go like this and then head down, but I don't see that happening soon. So right now, I would just be on a lower time frame. This is a 3-hour. I'd look for a pop up and sell the pop up. That's what I would look for right now, because it looks like it's like if there is a pop up on the 3-hour, it's probably going to only be reflected visibly on the lower time frame charts. So I would look for kind of a low time frame pop up and then sell that rally. Sell that rally and then write it down. That's exactly what I would do on this. So again, get the free algo. It's right there. Go to the description, click the link, put in your email, first name, even if it's a fake first name, I don't really care. And the next screen will be your algo. We'll email it to you as well. But you get the free algo. Right now, what I'm about to do is head over to Algo Factory's private live lab, because we continue this discussion for as long as another hour, almost 50 minutes, right? If people have questions, I just handle them. On a day like this that is very slow, we might end a little bit early just because what is there to talk about? The market's really waiting for Powell, and it's not very predictable until then. So, that might be the case. So if the Guerilla is I think he's almost ready to come back. He had a personal matter to handle over the last several weeks, and so we haven't had him in the chat there for a minute. But he is going to be back very soon, and he is able to give us a lot of what's going on with the macro, like what's going on in the real world, because he does massive deals around the world and deals with very wealthy people who have good information. The reason they are wealthy oftentimes is because they're well informed. So we'll have him back shortly, and we'll be able to have those discussions in the private live lab. In the meantime, thank you all for watching. I hope that you have an awesome weekend. Come on over to algofactory.tech. We will teach you how to trade like a hedge fund pro. And in the meantime, do not forget,
join us or die.
Alan Rickman is just kidding. You will not die, but please join us either way. And I really appreciate you coming to see us today. Bye now.